Hello guys, I hope you're all doing well and I hope your preparations are going on in full swing. Now I am making this video for two reasons. Reason number one, yes, I want to give you a proper discussion, a proper explanation on this concept of books of accounts in your Companies Act. And number two, I also want to discuss with you how exactly to study. Now this question, how to study, keeps coming up now and then on my Telegram channel as well. Students keep asking that, ma'am, how exactly are we supposed to study? What is that secret formula of studying? And I always keep telling them that listen, study in depth. But what exactly do you mean by study in depth? I'm not sure if you actually understand that correctly. See, listen to me. In-depth studying means what? It means you take a concept, alright, and you go to the whole core of the concept. You ask the right set of questions. What, why, how, where. Ask those questions and understand the logic behind the provision. Try to interlink the concepts, try to interlink the provisions. That is in-depth learning. But however, understand that there is no limit to depth. Depth can be limitless. So till where are you going to go? I mean, there has to be a full stop, right? Because you're not just learning because you want to gain knowledge. That's not your only objective. You're preparing for an examination. So yes, you should be doing in-depth learning, but you should strike a balance. You should study to that extent which is required for your examination point of view, or one level beyond what is required for your examination point of view. So yes, go in depth. Don't just skim through the concepts. Don't just skim through the concepts just looking at the concepts from the top. That's not going to help anymore. You are supposed to go in depth, but at the same time keeping in mind the examination point of view. Thing number one. Thing number two, when you are learning, the second thing that you should always keep in mind, yes, you should go in depth, yes, you should understand the concept very, very nicely, but know that just knowing the concept is not enough. You also have to communicate to the examiner how well you know the concept, and the only communication between you and the examiner is your answer paper, those 3 hours. Now, in those 3 hours, you have two options. You either show off your conceptual knowledge in the form of own words fully, or you show off your conceptual knowledge writing keywords. Now, very obviously you know the answer, which is more preferred, showing off our conceptual knowledge using keywords. Just knowing the concept is not enough. You got to communicate that concept to the examiner using the right set of keywords. Now, keywords, there is so much discussion around keywords, but what does keywords mean? Does it mean you have to study your entire ICAI study material word to word and go and vomit it in your answer paper? No. Understand what the expectation is. They are not expecting you to by heart the whole study material, guys. That is not the expectation, because it is impossible. You know what happens? Students get low marks, okay? And then they start thinking, why did I get low marks? And they themselves arrive at a conclusion, oh, I must have gotten low marks because my language would not be correct. And then what they do is they take the paper, like for example, let's say they take the law book, they'll study one para, they'll write and see. They'll study one para, they'll write and see. Guys, this is not sustainable. This was possible in school, but it's not sustainable here in your intermediate, in your final, because your syllabus is huge. You cannot write and see your entire syllabus. It's impossible. So what is the solution then? What is keywords then? What is the expectation then? You should be knowing the main parts, the main words, the legal words you should be knowing. And interconnecting those legal words you can do in your own manner, in your own words. The keywords have to be there. Interlinking those words will be in your own language only. Like for example, books of accounts are supposed to give a true and fair view of the state of affairs of the company and branch office. Now what are the keywords over here? True and fair view, state of affairs, company, branch office. Now these 4 are your keywords. Interconnecting this can be in your own language, guys. You're understanding. So if you know what the expectation is, you can accordingly put in the effort to master that expectation. So know that they are only expecting you to know the keywords. If those keywords are there in your answer paper, you take the marks and go. Alright. Now listen to the third point that you should keep in mind when you're studying. And when I'm making this video, I'm talking mainly about how to study your theory papers like law, audit and strategic management. Okay, I'm majorly targeting your theory papers. See, there has to be some practical approach in your mind when you're preparing your law paper. Especially, like you should be knowing the interconnection between the provision with the practical world. Just rote learning, just mugging up is not enough. You need to know how is that concept applied practically. Only then in the examination, when you get application oriented questions, you will be able to easily apply the concept in that particular question. You're understanding? So I'll give you one example to help you understand this better. Like for example, when we are removing an auditor, we have to pass a special resolution, but this special resolution can't be passed by way of postal ballot. This special resolution has to be passed only at the general meeting. But why? What's the reason? The reason is because when we remove the auditor, we have to give the auditor an opportunity of being heard in person. If this resolution is passed by way of postal ballot, now in a postal ballot there is no physical meeting. So without a physical meeting, how will we give the auditor an opportunity of being heard in person? So that is why we say that when we are removing the auditor, the special resolution has to be passed only at the general meeting and not by way of postal ballot. I'll give you another example. You must have learned in your share capital chapter that equity shares should not be issued at a discount. Equity shares, preference shares cannot be issued at a discount, but they can be issued at a discount if they are sweat equity shares or under a debt restructuring scheme. So the debt restructuring scheme, theoretically you've read about it, but practically try to interconnect it, like in the full course how I've done it for you. I've interconnected it for you with the SpiceJet case. Even SpiceJet went through a debt restructuring scheme where the debt was converted into equity shares. So like this, when you practically connect the concepts and when you learn, now when you get an application oriented question later in the examination, it's very quick. Very quickly you are able to identify that which provision are they actually targeting. I'll give you one more example. Now in your share capital chapter, you have this provision, right, that the government of India, if the company owes money to the government of India and if the company is not able to repay that loan to the government of India, even if it was not a convertible loan, still in the public interest, the government can convert this loan into shares. Right? The exact same thing happened in the Vodafone case. The Vodafone case plus Aditya Birla plus Government of India. That whole story, if you interconnect that provision with the story, then in the examination it's very easy for you to identify, and also your interest in the paper stays intact. You don't get bored and you're also up to date with the current affairs. So it's like a win-win from all sides. So ensure when you're studying, you ensure that you are getting some practical approach as well. Know that you should not just be learning the provisions, you should also be knowing that how are these provisions actually being applied practically. And that learning, in-depth learning plus thorough conceptual understanding plus practical application, this is a deadly combination. And one last thing, section numbers. Now this is one thing I want everybody to listen to me carefully. Yes, no doubt, if I write section numbers, I will be able to create an amazing impression on my examiner. But tell me, are section numbers the only way of creating an impression on the examiner? A big fat no. See, do not stress about section numbers. If you're able to remember them, great. If you're not able to remember them, don't take unnecessary pressure. It's not worth the time and the effort. If you're able to learn the section numbers in the course of your usual studying, okay. Don't spend over and above extra time to learn section numbers. That is not worth it. Because if I write the section number correctly, I'm not getting extra marks. And if I write the section number, if I don't write the section number, I'm not losing any marks. But however, if I write the wrong section number, I am losing marks and I am losing a good number of marks. You're understanding? So if you want to create an impression on the examiner, section numbers are not the only method to create an impression. You can create an impression by writing solid answers. You can create an impression by writing proper legal language with all your keywords intact. Present your answer properly. That is sufficient. You're getting the point. So don't unnecessarily stress yourself with section numbers. So these were 4 pointers which I wanted to tell you all about how exactly to study, and I will also demonstrate this for you now with an example. I'll take this concept of books of accounts which you have in your accounts of companies chapter in your corporate and other laws paper. I'll show you how do you do in-depth learning, what kind of depth is required, what are the keywords which you should remember. All of these points I'll check them for you in that discussion. How should you connect it to the practical scenario and learn? All of these points I'll demonstrate to you in this books of accounts discussion. Listen to me. See, listen, section 128 of Companies Act 2013 very clearly says that books of accounts have to be prepared by every company. It has to be prepared by every company. There are no exceptions. So you may be a public company, private company, 1% company, listed company, unlisted company, doesn't matter. No matter what kind of a company you are, you have to prepare books of accounts. And these books of accounts have to be prepared every year. It's an annual exercise. So books of accounts have to be prepared by every company for every financial year. So here itself 2 concepts are involved. Number 1, which company has to prepare books of accounts? Every company. Number 2, books of accounts have to be prepared when? They have to be prepared for every financial year. Now comes the question that what exactly do you even mean by books of accounts? There is a definition which is given to us in the Companies Act. The definition starts with the word includes. Now includes itself indicates to us that okay, this is going to be an extensive definition. In your General Clauses Act, in your Interpretation of Statutes chapter, you learn that there are 2 types of definitions. You have exhaustive definitions and extensive definitions. Exhaustive definitions start with the words mean. Extensive definitions start with the word includes. So here the definition starts with the word includes, which indicates that whatever is given in the definition, these 4 points which are given in the definition, the meaning of books of accounts is not restricted to these 4 points. Books of accounts also includes these 4 points, which itself indicates that these 4 points are just examples of books of accounts, but the meaning of books of accounts is not restricted to these 4. Right? So what does books of accounts include? The definition says books of account includes record. Now records maintained by the company relating to what? Records maintained by the company relating to 4 things. Number 1, records maintained by the company relating to sums of money received and expended by the company. Sums of money received and expended by the company, nothing but records relating to incomes and expenditure of the company. Number 2, it includes records maintained with respect to sale and purchase of what? Of goods and services by the company. Number 3, it includes records maintained with respect to assets and liabilities of the company. And lastly, it will include records maintained with respect to items of cost. Now let us try to understand this a little more in detail. See, listen, what is books of accounts? It is records. Now, records maintained by whom? Maintained by the company. Now, these records are relating to what? These records will contain information about what? They will contain information about incomes and expenses of the company, sales and purchases of the company, assets and liabilities of the company, and items of cost. Now, practically, if I see, how do we prepare books of accounts? We start with the journal book, guys. Journal, ledger, then we have the day books. You have your purchase book, sales book, your cash book, you have your trial balance. So till the trial balance, whatever you prepare, it all comes under books of accounts. Like for example, whenever you earn an income, or let's say you incur an expenditure, you'll be passing a journal entry. So that journal entry, the journal book will come under books of accounts. Then you will be having, the company would be having sales and purchases. Company will maintain day books, your subsidiary books, sales book, purchase book, even that will come under books of accounts. So books of accounts includes your journal, your ledger, your day books, your trial balance. So till the trial balance, whatever the company prepares, it all comes under books of accounts. Now sums of money received and expended is nothing but incomes and expenditure, sale and purchase of goods and services, assets and liability, and items of cost. See, these 3 things you've understood. These 3 things are very simple. Books of accounts are nothing but records relating to income and expenditure, records relating to sales and purchase of goods and services, and records relating to assets and liabilities. But what do you mean by items of cost? Items of cost are nothing but your cost accounting records. Now in your costing paper, you prepare the cost sheet, you find the direct material cost per unit, you apportion the overhead cost amongst the units. So items of cost are nothing but the cost accounting records which the company is supposed to maintain. Now what are the items of cost which company has to maintain? All of that is under section 148. So items of cost as prescribed under section 148. But you answer my question. Does every company have to prepare books of accounts? Yes. Does every company have to prepare these three things? Yes. But does every company in the books of accounts have to prepare items of cost? No. So items of cost is only for the prescribed classes of company. So my conclusion right now is that yes, no doubt, every company is supposed to prepare books of accounts. 1% company, small company, big company, listed company, unlisted company, public, private, every company has to prepare books of accounts, and books of accounts includes 4 things. So ideally speaking, all these 4 things every company is supposed to prepare, but there is an exception. This last point need not be prepared by every company. It has to be prepared only by the prescribed classes of companies. In your auditors chapter, you learn about cost audit. So over there itself you learn this section 148. So section 148, what are these prescribed classes of companies? Which company has to prepare cost accounting records? Out of those companies, which companies have to get the cost accounting records audited? All that comes under your auditors chapter. So this is something which you will be learning over there. Now listen, these books of accounts which the company has prepared, which basis of accounting is a company going to follow? We know very well that there are 2 bases of accounting, accrual basis and cash basis. In accrual basis, tell me, when do we record an income in accrual basis? When we earn the income, guys. Whether we have received the income or not, it doesn't matter. In cash basis, when do we recognize an income? We recognize an income when we receive the income, right? Only when we receive it, only then we recognize it. Similarly, tell me, in accrual basis, when do we recognize an expense? We recognize an expense whenever we incur the expense, whether we've paid for the expense or not, it doesn't matter. Similarly, in cash basis, when do we recognize an expense? In cash basis, we will recognize an expense only when we pay for the expense. So understand very carefully, there are 2 bases of accounting, but companies don't have a choice. Companies have to follow accrual basis of accounting only. Companies are not allowed to follow cash basis. And here, there is no exception. See, generally in many places you find an exception. No, that if you're a 1% company, if you're a small company, you don't have to do this, you don't have to do that. Like for example, cash flow statement, you don't have to prepare if you're a 1% company, if you're a small company, if you're a dormant company, if you're a startup company, you don't have to prepare cash flow statement. So like this, you have so many exceptions in so many places. But in these 2 points, there are no exceptions, which means this rule will apply in a standard form to all companies. So all companies, their books of accounts have to be prepared on accrual basis only, and their books of accounts have to follow the double entry system of bookkeeping, no following single entry system. What is this double entry system of bookkeeping, guys? You must have learnt this on your very first accounts class. Double entry system of bookkeeping means every transaction will touch upon minimum 2 accounts. Every transaction will have a debit and a corresponding credit. So you are supposed to follow double entry system of bookkeeping only. Your books of accounts have to be prepared on accrual basis only. Okay, so 2 points we have learnt. Point number 1, every company has to prepare books of accounts for every financial year. Point number 2, books of accounts means or includes? It includes. So exhaustive definition, extensive definition, extensive definition. It includes what? Records. Records relating to how many things? 4 things. What are those 4 things? Sums of money received and expended, sales and purchase of goods and services, assets and liabilities, and items of cost. Does every company have to prepare books of accounts? Yes. Does every company in the books of accounts have to make records of items of cost also? No. Items of cost under section 148 is only for prescribed classes of companies covered in your auditors chapter. Okay, then accrual basis or cash basis? Accrual basis. Single entry or double entry? Double entry. Coming to the next point now. Books of accounts should give a true and fair view of the state of affairs of the company and branch office. There are a lot of points in this one single sentence. Let's do a clear postmortem of the sentence and learn it part by part. Point number 1. Books of accounts should give a true and fair view. Now, what do you mean by true and fair view? True and fair view means two things. Number 1, the books of accounts should be free from material misstatements. So point number 1, there should not be any material misstatement. Material indicates what? Significant. There should not be a significant misstatement. Misstatement means what? Misstatement will include two things. Either you're writing the wrong statement or you're hiding important information. Both will come under misstatement. So books of accounts should give true and fair view, which means books of accounts should not have any material misstatements. Neither should it have wrong information, nor should you hide important information from the books of accounts. I'll repeat, neither should you put wrong information in books of accounts, nor should you hide important information from books of accounts. And number 2, the books of accounts should faithfully represent, they should honestly represent the financial performance of the company. If anybody looks at the books of accounts, they should properly be able to understand what is the real financial status of the company. The financial performance of the company should be honestly evident from the books of accounts of the company. So first point you've understood over here, books of accounts should give a true and fair view. Now true and fair view of what? Of state of affairs. But whose state of affairs? Two things, company's state of affairs and branch state of affairs. This itself indicates to us that we will be preparing two sets of books of accounts. If, like for example, if the company has a registered office in Chennai and company has a branch office in Bangalore, the Bangalore branch will prepare separate books of accounts. So whatever transactions are being affected in the branch, for those transactions separate books of accounts will be prepared, and those transactions which are being affected at the registered office, a separate set of books of accounts are going to be prepared. So we know now that there will be, for like if I have 100 branches, each of these branches will maintain their own books of accounts. So books of accounts should give what? True and fair view. True and fair view of what? True and fair view of state of affairs. Whose state of affairs? Company and branch office. This itself indicates company will be preparing its books of accounts and each branch will be preparing their own books of accounts. Okay, now see one small concept testing point. Books of accounts are prepared for company also, for branch office also. What about financial statements? Do we prepare financial statements also for company separately, for branch separately? Does each branch prepare financial statements? No. Financial statements are prepared only for the company as a whole. The branch office, each branch office prepares its own books of accounts. But the branch office does not prepare financial statements. You will understand why as I go a little deeper in this concept. So until now, how many points have we learned? Point number 1, we learned which company has to prepare books of accounts? Every company. When does a company have to prepare? Every financial year. What should the books of accounts contain? What is the definition? Means or includes? Includes. Exhaustive definition, extensive definition? Extensive definition. It includes what? Records. Records relating to what? 4 things. What are the 4 things? Sums of money received and expended, sales and purchase of goods and services, assets and liabilities, items of cost. Items of cost under which section? Under section 148. Every company has to prepare books of accounts, but this items of cost has to be prepared only by prescribed classes of companies. Only some companies which are into manufacturing of goods, provision of services, only some companies have to prepare items of cost. And just for your information, practically if you see, companies do all this maintaining electronically these days. All these are being maintained on softwares, like you have your Tally, your SAP, SAP. So they do all of these, on these ERP systems. So you will not really find today a separate sales book, a separate purchase book, but know that preparing books of accounts online is not a mandatory requirement. They can be prepared either physically on paper by pen, or they can be prepared even using softwares like Tally, your SAP and any other ERP software for that matter. Then we learned every company has to follow accrual basis, has to follow double entry system. There are no exceptions. Then we learned that the books of accounts should give a true and fair view. True and fair view means what? There should be no material misstatement, and the books of accounts should honestly represent, they should faithfully represent the financial position of the company. And these books of accounts should give a true and fair view of what? True and fair view of the state of affairs. Whose state of affairs? Company and branch office. This itself indicates to us that company will anyways be preparing books of accounts. There will be another set of books of accounts which each branch on its own will be preparing. But however, financial statements each branch will not prepare. That is still pending. I'll interconnect that with you with a provision a little later. Now comes my next discussion, an extremely important discussion. Till here you are thorough with the concept. Now with a very calm mind you will be able to listen to my next provision. Where are you going to keep the books? Books of accounts, books and papers, where are you going to keep? Financial statements, where are you going to keep? See, books of accounts and books and papers, these have to be kept by the company together. Okay, listen to me. First of all, every company has to prepare all the three things, guys. Every company has to prepare books of accounts, books and papers, and financial statements. All the three things every company has to prepare every year. Financial statements, life is simple. Let's finish that off. Financial statements company will keep at the registered office, no other option. Okay, but where is the company going to keep the books of accounts and books and papers? First tell me, there are going to be how many sets of books of accounts, guys? There are going to be 2 sets, no? Company is anyways going to be preparing. Each branch will also be preparing. Let's talk about both of these one by one. Let's talk about company. Company is preparing books of accounts. By default, those books of accounts will be kept at the registered office. But however, there is also an option that we can also keep them at any other place. There is also an option that we can keep them at any other place. So can I keep them in London? No, it has to be kept only in India. And who will decide this? Board of directors. How will they decide this? By passing a board resolution. Where will the board resolution be passed? At the board meeting. After passing this board resolution, from the date of the board resolution, within 7 days itself, they must inform the ROC about this. In writing, they must inform the ROC about this. What should they inform the ROC? They should submit form number AOC 5. They must also give full address of the place where the books of accounts and books and papers are going to be kept. Why should we inform ROC? I will tell you that. Till here you understand first. Where are we going to keep, guys? What do we have to keep? What is the company going to prepare? Whatever the company prepares, company will have to keep. Company is going to prepare books of accounts also, books and papers also, financial statements also. Now financial statements keep at the registered office, story over. But books of accounts and books and papers, 2 sets we will have. Company will anyways be preparing. In addition to that, each branch will also be preparing. So branch will come to it later. First, let's focus on company. Whatever the company has prepared, company, you have 2 options. You can either keep it in the registered office or you can keep it in any other place. But in India, board only will decide that, and board will decide that by passing a board resolution in the board meeting. And once that board resolution is passed, within 7 days, we have to inform ROC about it by filing form number AOC 5, and through that form we should also inform ROC what is the full address of the place where the books are being kept. Okay, now listen to me. Why will a company do this? Let's think a little practically. Why? I mean, company can keep in the registered office, no? Why do we have the provision? Why will any company ever want to keep the books in some other place? Why? Company can keep in the registered office itself. See, listen, I'll give you one example. Let's say the company has a registered office. Registered office is, let us say, in Chennai. But the Chennai registered office, let's say it's in West Mambalam. In Chennai, in West Mambalam, the registered office is situated. Okay. Now, it's a small place, guys, that registered office. The whole finance team does not have place to sit over there and work. So what they did is, let's say in Egmore, they took one big place on rent. There the whole finance team is sitting. So where is the registered office? In Chennai, in West Mambalam, the registered office is situated, but the finance team is sitting where? In Egmore. So in Egmore only the finance team is sitting. So for the sake of convenience, all the books of accounts, what are they thinking? Where will they keep? They will keep in Egmore. You're understanding? Yes. So like this, a lot of times it happens that the company decides not to keep the books of accounts in the registered office and to keep it at some other place. So who makes this decision? The board of directors. How do they make the decision? By passing a board resolution. Where do they pass the board resolution? In the board meeting. Then whom do they inform? The ROC. Within how many days? 7 days. 7 days from when? 7 days from passing the board resolution. How do they inform? By filing form AOC 5. In AOC 5, what's the most important thing they tell the ROC? The full address of the new place where they are keeping the books of accounts. Now tell me, can the company keep, let's say, few years books of accounts in this place, few years in this place? Yes, this is allowed. Some books in the registered office, some books in any other place. Is it allowed? Yes, it is allowed, because the section says that the company can keep all or any of the books of accounts in any other place. The section says that the company will keep the books of accounts in the registered office, or company can keep all or any of the books of accounts in some other place. See, read the second proviso over here. Follow my cursor. Read this and see. Provided that all or any of the books of accounts aforesaid and other relevant papers may be kept at such other place in India as the board may decide. So what does this mean? Do I have to keep all my books in one place only? Not necessary. We can keep, the main point over here is all or any of the books of accounts. All or any of the books we can keep in some other place in India. So yes, there is a possibility that we can keep some years books of accounts in the registered office, and some years books of accounts we can keep them in let's say some other place in India. That possibility is there because the Companies Act is letting me keep all or any of the books of accounts in some other place in India. Till here understood, guys. Now what is pending? Two things are pending. Thing number one, why financial statements branch office does not prepare, that is pending. And one more thing that is pending is, why do we have to inform ROC? We are keeping books of accounts in Egmore. Why should we inform ROC? Let me tell you that now itself. See, we have this concept of inspection of books of accounts. Alright, that the books of accounts of the company can be inspected by some people. In that list, who and all can inspect? One of the persons who can inspect is ROC. So if ROC has the right to inspect the books of accounts, first of all, ROC should know where the books of accounts are kept, guys. So therefore, if we are moving them from registered office and if we are taking the books of accounts to some other place in India, we should inform ROC that ROC, this is where we are going to keep the books of accounts. And one more thing, tell me, if the company is going to keep the books of accounts in the registered office, for this also should the company inform ROC? No. Why not? Because this is default. By default, where is the company going to keep? Registered office. Whole drama will apply when? Whole drama will apply only if we are keeping in some other place. Only then we have to inform ROC. So this point you understood. Why do you have to inform ROC? Because for the purpose of inspection, ROC also has the right to inspect. ROC should first of all know where is the books of accounts even kept. Only then ROC can inspect. So therefore, if we are moving the books from our registered office and taking them to some other place, we should inform the ROC the full address of the place where we are keeping the books of accounts. Okay, now with this we have completed learning company's books of accounts. We know very well that there will be two sets of books. Company will anyways be preparing, each branch will also be preparing. So company's books, where will we keep? Two options fully we have completed. Now let's focus on branch office books. Branch office may be in India or branch office may be outside India. Wherever the branch is, if the branch is in India, we will keep the books in the branch office. If the branch office is outside India, we will keep the books in the branch office. So wherever the branch is situated, whether the branch is in India, outside India, doesn't matter. Wherever the branch is situated, we will keep the books of accounts in the branch. But however, the branch office has to send something to the registered office. The branch office has to send PPSR. I generally tell students to remember it as PPSR. As soon as I say PPSR, what is coming to your mind, guys? 4 keywords will come to your mind. Proper, periodic, summarized, return. You write all the 4 keywords in your examination and see how you don't get marks. You write all the 4 keywords, but difficult to remember all the 4 keywords. So remember it through this hint, PPSR. Where will the branch keep the books? Branch office. What if the branch office is outside India? Still in the branch office. But what will the branch office send? PPSR. Full form, proper, periodical, summarized, return. Now understand, branch office will send PPSR. Branch office will send to whom? Branch office will send to registered office or any other place. Why 2 options? We will have to see where the company is keeping books. Company is having 2 options, no? Either registered office or at any other place. So if the company is keeping the books in RO, branch office will send PPSR also to RO. If company is keeping the books in any other place, company has filed AOC 5 and all, then branch office will send PPSR to any other place. You're understanding, able to interconnect. Where is the branch office going to send the PPSR? Wherever the company is keeping books of accounts. If company is keeping books of accounts in RO, BO will send PPSR to RO. If company is keeping books of accounts in any other place in India, BO will send PPSR to that other place in India. Okay, what will the branch send? Proper, periodic, summarized return. Periodic. What should the period be? Every 15 days, every month, every quarter, what should the period be? Period is not mentioned. So period, who will decide, guys? Period will be decided by the board of directors. Whatever they decide, that will be the period. But understand the logic. Why should the branch office send PPSR, guys? Don't you think at the registered office, the company should know what exactly is happening in the branch office? So therefore, every period, like for example, generally it is every quarter. Some companies it's every fortnight. So every quarter or every period, the branch office will send the PPSR. That way the company will get to know, okay, what exactly is happening in the branch. But tell me, does a branch have to send a copy of their books of accounts to the registered office? What is a branch sending? Is a branch sending books of accounts copy? No. We don't want your full journal. Just give us summary. Just tell us total sales how much. Just tell us in this quarter total purchase how much. Just tell us in this quarter total salary how much. We want it to be a summarized return. So in these 4 words, periodic, board will decide. It has to be summarized. I don't want full books of accounts. And why should the branch office send this? Because at the registered office, they should know what is happening in the branch office. You're getting my point, guys. So if the branch office, whether it is in India, whether it is outside India, the branch office is going to keep the books of accounts in the branch office. This itself indicates to us that there are 2 sets of books of accounts. Companies anyways preparing books of accounts. Branch will prepare its own books of accounts. Branch books of accounts will be kept in the branch. But branch, you cannot keep your transaction secret. You have to send PPSR. What will the branch send? PPSR. Full form, proper, periodical, summarized return. To whom will the branch send? Registered office or any other place. How will branch decide where to send? Wherever the books of accounts of the company is kept, there only branch will send. It has to be detailed return. It has to be summarized return. It has to be a summarized return. And what should the period be? The board will decide. Companies Act is silent. However, if the branch happens to be outside India, in that case, specifically they have mentioned that PPSR has to be sent to registered office and not to any other place. If the branch is outside India, the rules have specifically mentioned that PPSR has to be sent to registered office and not to any other place, and this period has to be quarterly. See, they have prescribed these two rules for foreign branches. They have not mentioned anything for Indian branches. So we will take freedom. Indian branches will send to RO or to any other place. And what is the period? Board will decide. Same rule we cannot apply over here because the rule very clearly mentions that this rule is for foreign branches. So if the branch is a foreign branch, they will also have to send PPSR, but they will send only to registered office and they will send every quarter. Crystal clear, everybody? So first of all, we learned every company has to prepare books of accounts every financial year. Then we learned what are books of accounts. Then we said accrual basis, double entry system. Then we said true and fair view of the state of affairs of company and branch office. Then we learned where are we supposed to keep the books of accounts. Company's books of accounts, two options we have: registered office or any other place in India which the board will decide. Branch office books have to be kept in the branch office only, but branch will send PPSR. Indian branch will send to registered office or any other place wherever the books of accounts of the company is kept. Foreign branch will send only to the registered office, and foreign branch the period has to be every quarter. Okay, now let me take you to the next point. Only 3 more points in our books of accounts discussion. Listen to me. The next point, these books of accounts have to be preserved. Once the year is over, you cannot dispose the books of accounts. You have to preserve the books of accounts. So first of all, what do you have to preserve? You have to preserve the books of accounts and the relevant vouchers. The relevant vouchers, basically the relevant books and papers you have to preserve. But see, I am not writing books and papers over here. I am writing only vouchers. Why? Even for this, there is a small catch. Because see, books of accounts means what? You know very well, everybody. Just now I taught you 4 things. Financial statements means what? Financial statements is your balance sheet, your P&L, your cash flow statement, your statement of changes in equity, your explanatory notes, which you learn in section, and everything about financial statements you learn in section 129. So my discussion right now is not about financial statements, nor is my discussion about books and papers. But please understand that what do you mean by books and papers? Books and papers includes 7 things, guys. It also, what does books and paper include? Dr. DW BVM. This is your hint. D stands for deeds. R stands for registers. D stands for documents. W stands for writings. B stands for books of accounts. V stands for vouchers. And M stands for minutes. See, right now in this point we are talking about preservation of books of accounts and vouchers. Why are we not saying full books and papers? Because books and papers, guys, it has registers. And each type of register, how many years you should preserve, that particular specific section itself says. Like for example, you prepared one register for deposits. Now deposits chapter itself very clearly says that deposit register has to be preserved for 8 years from the date on which the last entry was made in the register. So for registers, if you see, I can't apply the same rule for registers, because for registers, different registers, you have different periods for which you are supposed to keep given in different sections. So therefore we are not generalizing. This preservation we are not saying for all books and papers. We are saying this preservation concept only for books of accounts and vouchers. You understood why I am not writing books and papers over here? Because books and papers includes registers, and for different types of registers, what is the period for which you have to preserve? It's given in independent sections. So we are talking only about books of accounts and vouchers. Generally, you have to preserve them for at least 8 years. Minimum 8 years they have to be preserved. Like for example, in this year, we have to preserve last 8 years books of accounts we have to keep. Okay. But however, if the central government has ordered an investigation, in that case, central government can ask you to preserve for more than 8 years also. So generally, the requirement is only 8 years. But if central government has ordered an investigation, then it can be for more more than 8 years also. Now coming to the next point, again a very important discussion, inspection of books of accounts and books and papers. Even here I am discussing this concept with you in two parts, inspection of financial statements and inspection of books of accounts, books and papers. See, financial statements, very simple. Who can inspect, guys? Shareholders can inspect, even debenture trustees can inspect. When can they inspect? Any time during the business hours they can inspect. At the registered office they can inspect. Okay, so financial statements, are you noticing? Financial statements we are going to keep only at the registered office. There is no concept of preparing separate financial statements for each branch. The company will be preparing standalone financial statements for the entire company, including the branch. See, I had told you over here that why don't we have branch office financial statements? I told you I will tell you that in detail later. So why for the branch office we don't have financial statements? Understand, the branch is preparing books of accounts, but then the branch is sending PPSR to the registered office, guys. So with this PPSR, the registered office can prepare total financial statements, because now the registered office knows what exactly is happening in the branch office. So with this information, they can prepare financial statements on a whole. So that is why branch office need not prepare its own financials, because branch is anyway sending PPSR to the registered office. With that information, the company can anyways prepare whole financial statements. So financial statements will be kept only in the registered office. Financial statements, no concept of registered office or any other place, no. Financial statements will be kept only at the registered office. This point I told you here also, that financial statements will be kept only in the registered office. You have two options only for company's books of accounts. Branch office books of accounts in branch office. Financial statements in registered office. Only company's books of accounts you have two options. Okay. Coming back to my discussion now over here, financial statements have to be prepared by whom? By the shareholders, the debenture, financial statements will be inspected by whom? By the shareholders, by the debenture trustee. Financial statements can be inspected by them anytime during the business hours at the registered office only, not any other place in India, only at the registered office. But what about the books of accounts and books and papers? You tell me, can we even allow shareholders to inspect books of accounts, guys? No, because I'm sure you will agree with me that books of accounts have information in a lot more detail than financial statements, guys. Financial statements are a summary of the information, but books of accounts will contain one transaction in detail. That much information shareholders don't need, and that much information we will not leak out to the general public also, because books of accounts of our company contain confidential information about our company. So books of accounts will not be public documents like financial statements. So books of accounts and books and papers can be inspected by whom? They can be inspected only by the directors. The directors can be any type of directors, independent directors, whole-time directors, part-time directors, doesn't matter. They can be executive, non-executive directors, any kind of directors. When can the directors inspect them? Only during the business hours. Where can they inspect them? Wherever they are kept. Now tell me, where are the books of accounts kept, guys? Books of accounts will either be kept at the registered office or they will be kept at any other place in India which the board decides. So wherever the books of accounts are kept, the directors will go there and they will inspect. Are you able to interconnect? Same point we had learned here also. Company will keep books either in registered office or in any other place. Even if branch is sending PPSR, it will be in registered office or in any other place. So wherever they are kept, if they are kept in registered office, they will go to RO and they will inspect. If they are kept in any other place, they will go to that place and they will inspect. Now they can inspect, but can they take photocopy also? No, because the law uses the word inspect. The law does not use the word and also take copies. Like that the law is not saying. They only use the word inspect, so you can only inspect. Can AOA curtail this right? Can AOA say, in this company, directors should not inspect? Like that, can the AOA take away the right? No, AOA cannot take away the right. It is a statutory right, which means what? It is a right which the statute, it is a right which the Companies Act has given the director. AOA cannot take away this right from the directors. Then, can this inspection be through an agent? I'll keep this point pending. Let me finish this and then I'll come back to this point. Can this inspection be through an agent? Listen to me, everybody. Listen to the remaining 2 points and then we'll come back to this. See, sometimes the director may want to inspect financial information maintained outside India. What does the director want to inspect? Books of accounts. No, financial information. We are not talking about books of accounts over here. We're talking about financial information. And this financial information is outside India. Like for example, let's say my company purchased one nice fancy plant and machinery from Tesla, let's say. Now the company has this huge purchase and director wants to know information about this foreign purchase. So the director is asking for financial information relating to a transaction outside India. The director will not travel to the US for this inspection. The director will simply give to the company a written request. In that written request, he will tell the company the details of the information that he wants. What does he want? Like in my example, he will tell the company, I want details about this transaction that we had with Tesla. And the director will also mention in this written request that what is the period for which we want this details. Like this transaction happened in financial year 21-22. That transaction details I want. So the director will send a written request to the company telling the company what are the details that he needs and those details belong to which year. Once the company receives this written request, within 15 days itself, company will give this financial information to the director. Understanding? So the director will give a written request to the company. This written request will contain details and also the period for which these details are required. Once the company receives this request, within 15 days, company will give this information to the director. Now the question is, can the director ask for this information? Can he seek this information through agent or representative? The answer is no. The rules, the section very clearly says that if the financial information is outside India and if the director seeks this financial information, seeking the information he can do only by himself. He cannot seek the information through agent or representative. He's filing this written request. No, that is how he's seeking this information. That he can do only by himself. He cannot do it through an agent or through a representative. If he wants financial information outside India, he has to seek it by himself. So through agent representative, no. But this no is only for seeking financial information outside India, guys. But what if the information is in India? What if it is books of accounts, for example? And what if he wants to inspect the books of accounts through an agent? Can he do that? The answer is yes. The reason is the law says that through agent, through representative, you cannot seek only for financial information outside India. See, if you want to seek financial information outside India, this combination, two elements, you are asking for information outside India, this you cannot do through an agent. But if you are inspecting books of accounts, these books of accounts are in India. That if you are inspecting, the law does not say you can't do through an agent. Law says you cannot do through agent what? Seeking outside India. That you cannot do through an agent. But if you want to inspect books of accounts in India, can you do through agent or not? The law is silent. So when the law is silent, yes, I will do it. I can do it even through agent. They are saying no for agent only in this combination. Only if you are seeking information outside India, that alone you can't do through an agent. But for inspection, can we do through agent or not? Nothing is mentioned. So therefore, I can do it through an agent. Getting my point? And so this was about our inspection discussion. Inspection of books of accounts can be done by directors anytime during the business hours at the registered office or at any other place, but they can't take copies. AOA cannot take away this right. Inspection can be done through agent also, but if the director wants financial information maintained outside India, for that he has to submit a written request. The company will give him the information within 15 days. Now seeking this financial information he has to do only by himself. He cannot do it through an agent, he cannot do it through a representative. But basic inspection he can do even through an agent, not a problem. And now comes my next point, who else can inspect? Directors can inspect, who else can inspect? ROC also can inspect, officers authorized by SEBI also can inspect, officers authorized by central government also can inspect, but can members also inspect? No. Members cannot inspect the books of accounts, members cannot inspect the books and papers, members can inspect the financial statements, but they cannot inspect the books of accounts. But however, in the AOA, if it is mentioned that members can inspect, then okay, members can inspect, but otherwise generally members cannot inspect. Okay, and now coming to my last concept under the books of accounts discussion, and then I'll give you a summary of the entire discussion that we had, this entire provisions that we've learnt of books of accounts, who are responsible to ensure that these provisions are complied with. 4 people guys: managing director, whole-time director who is in charge of finance, the CFO of the company, and any other officer who is made responsible by the board of directors. These 4 people are responsible to ensure that all these provisions are complied with. Managing director, whole-time director in charge of finance, CFO, any other officer who is made responsible by the board of directors. If any of these provisions are not fulfilled, then what is the punishment? If any of these provisions are not fulfilled, these people will be punished with a fine of minimum 50,000, maximum 5 lakhs. Alright, so this was our entire discussion of books of accounts. We've gone as deep as possible. Alright, now if you have this much knowledge, now from whichever angle I asks you the question, you will be able to answer. Books of accounts, see, earlier we used to say that CSR is the only important concept in this chapter. It is still the important concept in the chapter, but if you see May 24, September 24, they have not asked CSR. Yes, CSR is still important, but even other concepts of this chapter are nicely being tested. That's why I purposely chose a concept other than CSR from this chapter to give you this knowledge base. Let me give you a revision. Books of accounts, who has to prepare every company? When does the company have to prepare? Every financial year. But what is books of accounts means or includes? Includes. Includes what? Records. How many records? 4 things. Records relating to what? Sums of money received and expended, sales and purchase of goods and services, assets and liabilities, items of cost. Items of cost prescribed under which section? Section 148. For all companies? No, only for prescribed classes of company. Does every company have to prepare items of cost? No, books of accounts every company has to prepare, but items of cost only prescribed classes of companies has to prepare. Accrual basis or cash basis? Accrual basis. Single entry, double entry? Double entry. Any exception? No exception. Then we learnt books of accounts should give a true and fair view of the state of affairs of the company and branch office. True and fair view means what? There must be no material misstatement and it must faithfully represent the financial performance of the company. The books of accounts should give a true and fair view of the state of affairs of what? Company and branch office. This itself indicates that while company will anyways keep its books of accounts, each branch of the company will keep its own books of accounts. But we also discussed financial statements only company will prepare. Each branch will not prepare its own financials. Then we learnt where are we going to keep the books of accounts. We said that the financial statements will be kept at the registered office, story over. But books of accounts and books and papers, if you see, companies one set we will have, branch office another set we will have. Companies books and papers, we can either keep them at the registered office or we can keep them at any other place in India which the board will decide by passing a board resolution in the board meeting. Once this resolution is passed, whom should we inform? ROC. Within how many days? 7 days. How should we inform? AOC 5. What should we also tell the ROC? Full address of the place where the books are kept. But if I am keeping my books in the registered office, then also should I inform ROC? No. You remember this entire discussion? And why should I inform ROC? Because later even ROC is having the right to inspect. So ROC should know where the books are kept. There only he will go and inspect. That's why. Then we learned branch office books will be kept in the branch office only. If Indian branch, keep it in the Indian branch. If foreign branch, keep it in the foreign branch. But we discussed that this branch office will send PPSR, proper periodic summarized return. Repeat again, proper periodic summarized return. Summarized return, detailed return. Summarized return. It has to be periodic. Now, what is a period? The law doesn't say anything, so the branch itself, so the board of directors itself will decide what the period will be, and the PPSR will be sent where? To the registered office or to any other place, basically wherever the books of accounts are kept. But however, if the branch is outside India, then the PPSR has to be sent quarterly only, and where only at the registered office, no option of giving it to any other place. Okay, then we learned that the books of accounts have to be preserved for how many years, guys? 8 years we have to preserve. Like current year, we will have to keep the books of accounts of the last 8 years. Okay, but if central government has ordered an investigation, then we'll have to keep the books of accounts for a longer period. Then we learned about inspection. Financial statements, if you see here, we discussed that shareholders can inspect, debenture trustees can inspect during business hours at the registered office. But what about the books of accounts and books and papers? We said shareholders can't inspect this because they contain too much confidential information and we don't want so much information to get leaked out. So only directors can inspect. It can be any type of director. Only during business hours, they can inspect wherever the books are kept. They will come there and they will inspect. But they can inspect, they can't take copies. But AOA cannot take away this right because it is a statutory right. Now, can they inspect through an agent? Yes. The Companies Act is silent. Companies Act doesn't say they can't inspect. So if they can't inspect, then they can inspect. So that's going to be our interpretation here. Then we discussed if the financial information is outside India, then the directors can seek that financial information outside India. They can simply give a written request telling the company that what are the details that they need and for which period do they need. Now, from the date of receipt of that written request, within 15 days, the company will provide this financial information to the directors. This seeking of financial information we cannot do through an agent. So if they have mentioned no over here, and specifically if they have mentioned no only for seeking financial information outside India, it means everything else is yes. Because if they wanted to say no here also, they would have mentioned. They are anyway saying no here for agent. So if they wanted to say no for agent here also, they would have mentioned. But they haven't mentioned anything. So therefore, can you seek financial information outside India through agent? No. Can you do inspection through an agent? Yes. Seeking financial information outside India, this combination you can't do through an agent. But inspecting books are in India, that you can do through agent also. Then we learnt in addition, ROC also can inspect, SEBI officers, central government officers also can inspect, but members can't inspect. And finally, we learnt that the persons who are responsible to do compliance in this entire section, 4 people are responsible: managing director, whole-time director in charge of finance, CFO, any other officer who is made responsible by the board for this purpose. And if there's any contravention, the punishment is going to be between 50,000 to 5 lakhs. Alright everybody, so with this we've completed our entire discussion on books of accounts. This one section, from all the possible angles we have seen, if you've understood this entire discussion, anything I say, I ask you in this section, very easily you will be able to handle. We've done conceptual discussion also, we've interlinked the provisions also, we've seen it from the practical point of view also, multiple times I've repeated. So major part of this section would have gotten registered in your mind also. I've discussed the logic with you in various places. Now with this, you're good to go and master this section on your own now. Alright, so with this, I'll close over here. I'll be bringing for you a lot more YouTube videos. Similarly, you ensure that you subscribe to this channel so that you can watch the upcoming videos as well. Thank you. Bye-bye.